All right, let's start it up. Thanks for joining us again. Today is October 31st, and today is the last public TA warm-up session that we're going to do at least until the end of November. I'll probably end up making these public at the end of the month, each month. But starting tomorrow, they're going to be back to patron-only events. And friendly reminder, tomorrow's the first of the month, and that is the best time to sign up for patrons, so check it out. Okay, so let's do as we always do. Zoom out. We've been looking at the 12-month. Let's just take a look at the 6. Overnight, Bitcoin rallied and broke 13,863, playing out pretty well. From what we were looking at yesterday, we had a little bearish divergence on the hourly. Really didn't result in much, and the rest of the day saw a nice steady climb and break. I believe it went all the way up to 14.1 Coinbase. We'll get into the closer metrics of that in a little bit here in the warm up. As we can see, the quarterly candle directly underneath the 2017-2018 resistance line. It's a good spot to be in. Not too much of note there. As we talked about yesterday, we're still looking at that Q2, July 2019 wick high at 13.2 as support, but at the moment does not seem that we're going to even be using it. So, a friendly reminder that today is the last day of October. And not only is it the last day of October, we had, I think I had this backwards. Yesterday, contracts expired. So I guess price ran after price expired, or future contracts expired. That mixed me up. I, for some reason, thought today was Friday. But we are looking at the potential right now for the highest Bitcoin monthly close in history. It sounds crazy. You know, we traded at 20,000 in 2017, but that monthly closed all the way down at 13.8. There is realistic, probable potential. The same way we closed that quarterly just a piece above, just a few dollars, like a 0.5% above the quarterly resistance. We have a probable close similar to that here on the monthly with the way price has been reacting. So that's 9 hours. 9 hours until October ends and we begin November. Very spicy. Close above that 13,863 is just an undeniable signal to the market that Bitcoin is ready to move higher, and it's ready to move past its previous all-time high. Really exciting stuff. There's no guarantee that we get it. Really exciting. We've never been so close, and with the condition of the macro state of the world right now, Bitcoin's really flexing its muscles here, showing us it is a safe haven asset. There was a lot of skepticism about it being a safe haven asset as recently as March of this year. Lots of people ragging on Bitcoin, saying, oh, like mocking it, saying it's supposed to be a safe haven. It's not. Well, people are probably going to eat their words here, it looks like. Absolutely performing as an asymmetric asset, and not just asymmetric, but a safe haven asymmetric asset. Perhaps the only one that exists. Crypto very likely is the only one. Very exciting stuff. So yeah, looking for the monthly close above 13,863. I will take it above 13.2, but that would not be really ideal. If we do get a close below 13.8, we are projecting that November is going to be a doji candle with a wick on top and on bottom, and likely closing green, but not a very large body. So what we could see is that doji open underneath 13.863 and then close slightly above it, setting up December for our rally projected to the 17.1, 17.2 area. A lot of possibilities. Personally, I'd feel more comfortable with the close above, but Bitcoin doesn't really care about how comfortable we are. Not going to be too much change here on the monthly, so we're just going to look at RSI. Looked at this yesterday, and we've been looking at it pretty much every day. Remind ourselves where we are. When we zoom out, we see that the 2019 June swing high in RSI put in a 66, a very bullish level, but was rejected. Currently, we are at 65.4, 65.5, inching ever so slowly up to that 66. Very important that this RSI moves up past 66. Doesn't have to be in October. It could be in November or December. But we need to, in order to remain bullish, put in a new RSI high here on the monthly. It's looking very likely. We're very, very close. Less than 0.5% away. And something to take note of here today as we go through the time frames, you're going to see this setup is going to be reflected through many different time frames we look at. We're going to be in this same situation where we have an RSI high in 2019. Smaller time frames, maybe August is the contender, but we'll see this high is on many time frames still that same threat. And we're going to see that other time frames are building up to a similar move. So things are either perfectly in alignment, the stars are aligned for a ridiculous bull run, or, of course, there's always a possibility. I don't believe personally that this is probable, but there's always the possibility that we fail to do that and we go into price discovery mode again into 2021. That's really all there is on the monthly. So let's just jump down to the week. Weekly, still solid, still good. Really the same targets as the monthly. We do have some additional weekly resistances. We do see 16.2, which was originally my target on a breakup from the August highs. 16.2, you can see it in my old videos. But I've since revised that to the 17.1 for reasons we've talked about, and I'm not going to go fully into. You guys are welcome to check out the previous videos if you're curious about that. About the weekly. So we're seeing that same thing that I was just talking about on the monthly. We have that problematic 2019 high. And what we need is we'll need to put in a higher RSI high on the weekly as well. And that will translate out into the monthly. If this were to go all the way up, we absolutely would get a higher high in the monthly. So this is really important what's going on here. There's a few very comforting things in addition though. So this is spooky, but we have some comforting things. We don't locally on the weekly have bearish divergence on the highs. We can see that the RSI is already higher. So we're not in danger of a local bearish divergence from the August high. It's just this very far removed 2016 high. So this does not imply that we're in trouble yet. We also, of course, have arguably a Class C divergence on the bottom of a double bottom type thing. So locally set up great. 72 RSI in the weekly is amazing. You can see that this topped out at 80. But if you look back to the previous bull markets, this is pretty much above 52 consistently. Is bull territory. No bears allowed, really. So we look at, let's actually move to 52. We can see price action very bullish when it remains above and very bearish when it struggles to retake that level. March's low cratered into it, but instantly rejected. And since we have stayed above that level, and obviously prices remain very bullish. So this is set up really well locally. There's no issue. We could, there's really nothing wrong even if we saw an RSI pullback because we've already set in that high. We're really protected against any local action. It's really just going to be this macro threat of if or when are we going to break that 2019 high on the weekly. MACD looking fine, same as yesterday. No sign of waning bullish momentum yet. Funding, something that we're going to start looking at more and more during this bull run if we're in it. Remaining bearish on the weekly despite setting new highs. Really strange that shorts are paying to be open. Even though I believe this is a 33-month high, people are jumping the gun. They're paying to short it. Very odd to me, but not a bad thing. In fact, maybe a necessary thing. During a bull run, especially when margin options and things are a factor, shorts serve to fuel parabolic runs by something called a short squeeze, which is essentially when traders who are short continue opening positions despite price climbing. And what happens is they're doing this in order to protect or reopen their shorts, and eventually, if price continues to rally, causes a short squeeze, which is shorts chaining together, essentially hitting stops. And when those shorts are stopped, they essentially function as if they are a long opened. The same is true in the sense of a long squeeze. When price keeps going down and traders are longing, if price continues down, all the longs are stop loss, which pushes the price down, which triggers more stop losses. And we actually saw that right here in March. I think it was Bitfinex. It was either Bitfinex or BitMEX. Actually had to, and I think this isn't necessarily, they didn't like really owe up to this, but this is what happened. They essentially DDoSed themselves during this event because of the chain liquidations going on. Their insurance fund was very much at risk of being collapsed, and price risked collapsing to a very low level. So I don't know if that's a good thing or a bad thing that they did that, but the chain reaction of positions being opened against trends without a reversal is very real and very powerful. So we potentially could see a short squeeze up this high, up at 13,000. A significant short squeeze at this level certainly would bring us at least to the 17.1 or 2 area, but potentially even higher. And that would be really no additional buying, just those positions closing. So it's a very interesting setup. Yeah, nothing too good outside of that here, I don't believe. Weekly still top of the bands. Moving averages don't show us anything. Middle Bollinger Band moving up ever so slightly, 10,832. And Ichi, nothing new over there. Well, weekly not too spicy yet. What's something actually of note that I should say here is, so today closes the monthly, but tomorrow closes the weekly. So it's an interesting setup. The monthly closes today, and then the 1st of November, a weekly candle closes. Really, this weekly is not in very much danger of anything significant. Certainly would not like to see it close under 13,000. That seems a little... It doesn't seem very probable at the moment. You never know, but I wouldn't like to see it close red, as I said, I think yesterday. That would look too much like an inverted hammer and be a bearish signal that I don't really want to see at this point. Wouldn't destroy the rally or anything, but I want to get the market confident. I don't want too much uncertainty, just the right amount. So daily, again, we're seeing that reflect that we saw on the weekly and on the monthly, is that our RSI high is ever so slightly lower. However, this is important, is that this is what I was talking about when I said this is more local. This is August's high. versus today. You can see that we've already actually haven't eclipsed. Even drag this out more. I don't think I scrolled back this far on the daily. Looks like, yeah, we have to beat the 88.68 barrier here on the daily. Though these are very far removed, so in my opinion, in my TA opinion, this is really the only value that we need to beat, which is good because it's a little lower at 85.27. Yes, we need to see this 88 be eclipsed as well. But with concern to short-term price action, I think that it's going to be the August high. That's really the hurdle. I think once we get over this, this will become very easy to take. And we can see that RSI is trending beautifully. We saw over here, we didn't have bearish divergence on our highs. We did see it on the 12-hour, and so we were looking for a pullback on RSI, and we got it perfectly, basically. Can't complain. If you look at this, it is very trend-like. It's very tight. These lows are sharp and coming up, and that's what we want to see. We really we want to see this move up. Maybe make a new high, come down, something like this, and then we're going to expect a return to the 50 at some point. We can even see it back here in 2019. Returning to the 50 after a high is very common and is not bad, is actually, quote, healthy. Daily, MACD, really nothing here except for, we do see momentum potentially waning. It's coming down. Has not really threatened to cross bearish, and if we look, there's so little. It's mind-blowing to me, actually. There's so little selling pressure. It almost doesn't make sense. Since September 14th, the daily has been positive on the MACD, minus one microscopic red candle, or red histogram bar. So what I would like to see, though, here is to come down, create a higher high than right here in October 17th or 18th. So maybe histogram comes down to 50-ish. And I'd like to see it come back up, eclipse the October 24th high, and repeat that, really. Really just repeat that over and over again. Higher low, higher high, higher low, higher high on the MACD. That is how you get to the moon. Put the stotch back on. I always remove it and then end up adding. No more indicators. Get out of here. Don't tell me what indicators I can. Cool. So I was hoping for this. Looks like we're getting it. Daily stotch, while not yet confirmed that it is going to cross. The way stotch works is if today's candle closes lower, this won't be bent. It will just be down. So until they really cross and close, we don't have a signal. But we do see that a close at this level likely will open tomorrow with the cross on the stotch daily. And since the trend is clearly bullish, a cross up on the stotch RSI is likely to lead to continuation to the upside. Moving averages, we did see that 5100, the 50 rejecting it on the daily, turned out beautifully. Price is still moving pretty solid. 200 EMA moved up to 10,438. And it just seems like we're cruising, doesn't it? I don't know where the bears went. I assume that bears capitulated here. Anyone who was going to sell sold at some level here. And I think that actually this long 3-month sideways period actually was maybe the nail in that coffin. Pretty much anyone who is bearish took profit at this level, pretty much expecting it to come down lower, and it never did. Really just series of higher lows, keeping out any new bearish money from entering. Really was beautiful, and we see that this trend has continued. Really no lower lows here. There wasn't really lower lows here. We did have, so we have this sell-off leg. So this was, however, you can see that that higher low trend just keeps going. We really aren't seeing any opportunity to get back in from here, from March 12th. You sold here. It is unlikely that you've been able to re-enter safely or confidently since. Unless obviously you entered on March 12th, like on the sell-off. But typically bearish money would not, as they would be looking to short and likely looking for lower once price traded down into the 3,000s. Market has done a beautiful job of this. Really incredible. People today are still, we rallied it to 14.1, and I heard today literally in one of the groups I'm in, I'm waiting for lower. Well, it's like, of course you are, but you've been waiting for lower since March. And it hasn't come. And you just keep saying that, and price keeps moving up. And it's like, at what point are you going to pull the trigger? And of course, they didn't have an answer. And the answer is, they're going to do it once we're actually ready for a correction. Once we're ready for a correction, I guarantee people who have been waiting for lower are going to end up buying in and getting wrecked, because that is pretty much how it goes. 12-hour looking pretty darn healthy. The MACD, we don't see any bearish divergence on the highs, and we see bullish divergence on the lows here. 12-hour looking great. We caught this in the episode. We did have 12-hour bearish divergence on RSI, and we were looking for a return to this RSI trend, and it looks like we did. When I put trends on RSI, I don't really worry too much about them being precise like I do with price. You can see that it'll pierce these lines. Essentially, as long as this movement in the same direction continues, I consider it valid. Really, if we break a low, then I will change my mind or try to reevaluate what I'm doing. So at this point, we'd have to see the 12-hour go underneath 56.5. Definitely possible. But if we look at this pattern, really looks like it's probably just going to do this. This would confirm that higher RSI high we're looking for, which may confirm that higher RSI weekly we're looking for, which would definitely confirm higher RSI monthly that we are waiting for. Everything is really set up nicely. All the cards, all the pieces are lined up, and we're just waiting to see them fall into place. Or not, or fall out of place, but so far, so good. Moving averages, nothing really too special. A has moved up, suggesting that maybe 13.5 is now our area for a scalp type stop loss. Onto the 4-hour. This is probably the ugliest part of the chart. We still have this bearish divergence. We're still seeing RSI highs come down and down and down and down and down, and price continues to move up. So that's not great, right? That's not a great sign. Thankfully, we do have bullish divergence on the lows, which is really the saving grace here on the 4-hour. We really needed to see that, and you can see it played out. Price at a new high. So really 4 hours in the same boat that all these other time frames are in. Everything is in the same situation where we're at a great spot of price. Wonderful spot. Potential highest close here ever on the monthly. But we need to see another move up. If we were to see a strong rejection in November or something, a bearish engulfing monthly candle in November, that would be extremely bad. Extremely bad. I don't think we're going to see that, but that would be extremely bad, because then all of a sudden that monthly and weekly bearish divergence starts to kind of lock in and becomes less and less probable that we're going to invalidate it. But at this point, it looks very, very probable that we will invalidate it. I'm really not worried about that at all. And we can see it on MACD as well. It's really mirroring RSI here. We see the highs coming down, same way that RSI is. And we see the lows coming down the same way that RSI is again. So we have conflicting signals on the 4-hour. This pattern is pretty ugly. You have bearish divergence on the highs, bullish divergence on the lows. And it's really kind of looking to be an ascending channel, which is not our favorite pattern. Maybe similar even to like this. There's something to watch out for. Certainly something to keep an eye for. But I don't think there's too much else on the 4-hour. We got our cross above the cloud, and price is just floating, seemingly due to lack of any selling pressure to be found. Now the 1-hour. It's crazy how similar every time frame looks. You probably noticed this, is we just keep seeing on almost every time frame this RSI bouncing up a trend line, making higher lows, higher lows, higher lows over and over and over again. But what it's really doing is it's doing a pretty good job of avoiding hitting these overbought or oversold zones. And this is a typical setup for a very large price change. Doesn't dictate which direction, doesn't really suggest which direction, but really the longer price stays not overbought or oversold, the larger resulting move comes once it does accomplish one of those statuses. Once it sells off to oversold or bought up to overbought, the longer it stays near 50, really, I would say proportionately you see a larger percentage move or delta in price. So we got a lot of signals that something's coming. Macro looks very bullish. We really just need to invalidate the bearish divergence on our highs that we're seeing kind of echo out through time frames. But there's very little that suggests that we won't. There's really, I haven't seen much at all that gives the edge, I guess, to bears here, and in the sense that we won't be able to accomplish that higher RSI high. Price just seems uninterested in selling, or buyers seem not to be allowing price to sell off at all. The final little tidbit that I wanted to, and I'm glad I remembered, is the other day, or the last 2 days, we were talking about this high, the previous touch to 13,863 on the 28th of October. This was a very heated time. People were excited. Target hit within 70 cents or something. And people all of a sudden were pretty afraid again. Now, this was a pretty weak sell-off, but we only know that in hindsight. This is a pretty weak sell-off. But while it was falling, I can understand why people would be a little afraid. And my first response was, what even is this? Look at this volume. This is no volume for what is potentially the most important value in Bitcoin right now, 13,863. To see like barely above maybe the average volume for all the visible candles on the screen, I wasn't convinced. That wasn't a rejection. And I had said, and it's in like the last video or the day before, if we had seen very high volume there, I would be more worried. That would suggest that maybe it was a real rejection. But with no volume, it's like stops weren't really hit significantly. It was just telling of a fake, like a fake out. The market was not interested. We can see that in the volume. That's really what volume tells us. Volume doesn't tell you if it's bullish or bearish or anything really. All volume tells you is how many units were exchanged in that candle. And the most important piece of information we can take away from that is how much interest does the market have at that price? And we saw not very much, very little. We saw again this morning on our break to 14.1, this is the volume we were looking for. this shows us that the market is interested in this level. Lots of stops were triggered. Lots of, probably in both directions, long and short. But we have not seen a sell-off. In fact, I would arguably say this is probably very bullish. We have this wick, or we saw these two large green candles trading all the way up to a new multi-year high. And I like this. It's probably scary, but I like that we have this whipsaw action, because what happened is you'll see that this price came down to a very specific level. Almost the exact bottom of where this 4-hour candle started. So essentially, people who tried to trade either one of these three candle setups, bullish setups, were potentially looking to hold that and see continuation to the upside. This wick stopped out probably all of them, probably every single one. Even ones open down here, likely we're going to look to stop even at 13,625 above these two candles right here. And without the extra weight of new longs being open down at these prices, removing threat in the future of profit taking and pulling price back down, this really does set up for a solid move. Longs and shorts get whipped out, and typically Bitcoin becomes more volatile when there are less margin positions open. So I like what we're seeing here. I like how gradual the sell-off is. Sure, we can say, but wasn't this sell-off gradual? Yes, of course it was, because there was no interest in it. We saw lots of interest. This is the biggest volume candle in quite some time on the hourly. If you look, it slightly eclipses the 28th candle here. This doji in the other direction. Let's see, was it? The only ones we can see is back here that were higher volume on these large moves up. So this is a great setup. Really great setup. We have a lot of support underneath us. We're seeing a lot of macro signals that are suggesting up. We're just still waiting. We're still waiting for that final yes. We have all of the paperwork done and we're just waiting for a signature. That signature could be this monthly closing above 13,863. Doesn't have to be. But that could be the final signature. And if we get it, if we set a higher monthly RSI high than 2019, it's just game over. It's game over for the bears. Price is just going to continue until it reaches a market euphoria and collapses, as all bubbles and cycles do. That could take more than a year to reach the top. Serious business. Yeah. All right. That's a pretty good rundown. Like a 15-minute quick. Possibly creating some bullish divergence on MACD. Not as much on RSI though. Not a lot here. We have a weak bearish divergence on RSI. We see many touches actually to this 73, 72 area. That's a very weak bearish divergence though. So actually not too much going on there. Much going on. Oop. Yeah. We're in a wait and see. So far what we're seeing is great. If we get these lows broken, we might be in trouble. We might be. But I say that very literally, like might. Doesn't imply that we are in trouble. It's just, you know, we have the possibility, because right now we really don't. Until we see a change, we have almost no possibility of bad. We'd have to at least see 13.2 lost or something. And if we saw that, we can start looking at it again. But where it is, man, it hit a new high. Volume was great, and the response from the market really wasn't selling. Still at 13,810. It's going to be a spicy day, guys. Got a feeling. Well, thanks for joining, everybody. Gonna go live streaming. I don't know when Sadly, got to figure that out. I was hoping that we would see a little upside and I would jump on. But yeah, I really enjoyed doing these. We're going to keep doing them. They're going to be patron only, though, into the start of the month, September. So if you enjoy these, if you think they're valuable, and you're not a patron, check it out. And you can join us every day for them. So yeah, I'll check you guys later, and I will see you probably when we stream in a bit. So have a great one, and happy Halloween.